California.
California. You have any Patriots? Can you show your Patriots jersey? I saw you wearing it.
It is football night in America. So what?
Oh, today it's football?
Yeah, it's Thursday night football.
Oh, who's playing?
Like, Cary?
It's the Bills and I don't know, Tampa Bay. Yeah, I think.
Okay.
Who's leading the series right now? Are there any contenders yet, or is it too soon?
What?
Jeez.
Oh, today it's football?
It's
What was that?
football.
Sorry, that was me. I was testing the live stream, making sure it was good, and apparently it
I was
is.
like, that wasn't me.
It was you. It was just you like 30 seconds ago.
Oh, okay. Go Bills. Alice is a Bills fan. Delray Beach, Florida. I actually have a friend that lives in Florida. She lives in Bradenton. I think that's close to Delray. Very, very nice area. Love Florida.
All right, folks. So we are streaming live on YouTube as well. Feel free to drop us your questions both on Zoom and on YouTube. We'll try to get to as many questions as we can as quickly as possible. If we're unable to answer your questions thoroughly, just feel free to give us a call. We're more than happy to assist you and go into your specific account or your specific situation with more details. So just kind of while we do wait a little bit for everyone to continue to jump on, we'll give it another minute or so. I do want to do a quick little brief disclaimer, just that we do have to share here. So here at Horizon Trust, we are a passive custodian and as such only perform the duties of a custodian. Horizon Trust Company does not provide advice or sell investments nor offer any tax or legal advice. So thank you very much, everyone. So we've kind of covered that before. That's just our little disclaimer here. We are a passive custodian. So we just hold your investments through your retirement accounts. So whether it be your 401k, IRA, or tax-free accounts, so Roths or 401k tax-free, we just hold those assets. We don't hold and their investments. So your investments have to be made individually with your own due diligence or with the help of a CPA or financial advisor. Cary, our compliance officer, do you have anything else to add to that?
No, that was very well said.
All right. Beautiful.
We already have questions. I like this.
We
were ready. They were waiting for this.
All right, folks. We do have questions. The questions are going through the Q&A. Actually, guys, let's make it a little bit better, just so everyone can kind of see the questions. Let's throw the questions in the chat. We'll go through the ones that are already in the Q&A as well, but drop your questions in the chat. It'll make it a little bit easier, and then we can actually pull those questions after the fact, so that way we can make them available to you as well, because we do want to have that information available to you along with this recording, which, as mentioned, is streaming live on YouTube. And once this actually ends right here, it'll be directly available on YouTube through our new page, Hurling Horizon, so that you guys can watch it immediately and play it back and watch it as many times as you want. So feel free to go check it out and give it a follow, and we'll see you over there as well. Perfect. So we're going to go ahead and get started. We have an individual who said, can you have multiple IRAs? Does the IRA cap per IRA for that year? How does that work? So Claudia, are you able to answer this question?
Yeah, absolutely. So to the first question, can I have multiple IRAs? The answer is yes. So you can have multiple IRAs. You can have a self-directed IRA with us. You can have a regular IRA with Fidelity, with any other custodian. You can definitely have as many as you'd like. The caveat to that is that you can only have the contribution limit does not change. So it's total. So our contribution limit for 2023 was $6,500. That means that you can put $1,000 here, $1,000 there, $1,000 everywhere, but you can have up to $6,500. So you can't put $6,500 in one and then 65 in the other. So that is the little disclaimer on that, but you can have as many IRAs as you'd like. Cary, is there anything I'm missing?
Nope. Perfect.
Perfect. So Heidi's asking, in her solo 401k, she can only lend herself half, but what can she do with the other half? So I'm gonna assume that Heidi is referring to a 401k loan based on that half value. So Cary, what is something that Heidi can do with that? She just responded and said, yep.
Yeah, and there's plenty of options actually. We usually actually turn the list over to what can't you do with the other half, and it does follow the regulations of most retirement plans. You can't invest with yourself, a disqualified person, or collectibles, things like that. But you have the option, and we do actually have an investment corner here on our website at Horizon Trust that you can go look. We have people who have invested with other companies, precious metals, things like that, notes and mortgages. So you have a lot of options to do that. It's just kind of figuring out what you are comfortable with and what you like to do.
Absolutely. Absolutely. Thanks, Cary. Timothy's asking, non-recourse loans, is there any info or input on how it works with a self-directed account?
Ooh, Cary, take it away.
That is a long-winded question, or long-winded answer, I should say. But yes, it is available non-recourse, meaning that there's no other recourse other than the property associated with the security of the loan, and it is available. There are certain institutions that can do it. There actually is a list on the website as well that we have. Usually it's not, you can't do that through like a bank or another mortgage financial institution, but it is available. So if you want more information, you can email us or call us or actually go to our website as well with some companies that actually offer those.
Yeah, I actually put the investment corner link on the chat. The password to get into the investment corner is opportunity with a capital O. So go there. The thing with the investment corner is that we made it so that it can be another resource for you guys to go ahead and educate yourselves on the options that other clients have done. As a passive custodian, we're not promoting any of these options. We're just giving them to you. So you can go ahead and read on them. If you wanted to learn more about any of the options, it depends on what you want to invest in or what interests you. There are phone numbers and websites that you can go so that you can visit their websites and call them and talk to that investment option.
Absolutely. And like we mentioned before, all of this is kind of with your own due diligence. You have to do your own research, see what investment makes the most sense for you. If you don't necessarily understand an investment, even if the returns look kind of good, you want to make sure that you've spoken with a professional that understands the investment and that it makes sense to you, because you need to be able to understand it, which kind of leads into one of our next questions from Mike. He's saying that if he has a promissory note in his self-directed account and the borrower defaults, does Horizon step in to attempt to recover, or is that on the account holder? And then what does Horizon do in that circumstances? Do you just write off the investment? So yeah, Mike, we are the passive custodian. So we are unfortunately unable to assist you with helping retrieve any of that money from that investment. You'll want to talk to the individual who you lent the money to, or if you have a promissory note, try to have a professional, either a real estate agent or a lawyer, prepare that document to maybe try to protect your money somehow, either through real estate or some sort of asset that you're able to recuperate your funds. Cary, how would Horizon in that circumstance write off the investment? So if he's unable to get that money back?
So, on our side, we try to help you as much as possible. Some loans can be a lot older. We try to get you information on the original loan, like contact information. We can get you copies of it to speak with the tax advisor or a legal professional to see if you are able to take possibly legal action. If that's not available, it is available. It is okay to write that off as a loss. We have had people do that where they've exhausted their efforts. They don't think they're going to get paid. They have no contact with the borrower. And their legal advice is that it would probably cost more money than actually anything that they would recover. So in that instance, we try to work with them as much as possible, get the information from them on who they spoke with, kind of the entire story, laid out to us, and that they have seek legal advice, and we can go ahead and get that taken off their account as a loss.
Absolutely. We had a couple follow-up questions from our contribution question, Claudia. So is there another limit for individuals who are over 50? Which, yes, there are, right? There's catch-up contributions.
There are, yes. Cary, what is the catch-up contribution? There we go.
So for
A
2023,
capital contribution is a business owner putting.
Siri is listening. to me.
Siri's jumping. Why don't we just ask her?
She's like, no problem, I got you.
So for regular IRAs, it is $1,000 extra you can add for 2023. I don't think the catch-up contribution is going to change next year, but I think they are raising the actual regular contribution limit next year. So for this year, it is 6,500, and the catch-up, if you are over 50, is 7,500.
Yes, take advantage of those catch-up contributions.
Cordy was also asking on contribution limits, but particularly for solo 401ks. For solo 401ks, Cordy, that one's a little bit more complicated because that one you want to work with your CPA or a financial advisor to figure out what your company, because you are in a solo 401k. So you want to determine what your company is actually able to contribute based on your books. And that's what a CPA or financial advisor would be able to tell you. And then once that is told, Cary, they're able to do the split between both the employer and the employee, which in this instance would be Cordy himself in both situations, right?
Right. So there's deferrals, and then there's salary contributions. So basically, whatever your salary is, you can make contributions through that in your solo K, or if your company is matching that, and you can split it either way. The maximum amount for 2023 is 66,000 total, with a catch up over 50 with an extra 7,500 on top of that. So it is a lot higher because it's contributions through your solo business. But yeah, it can be split in certain ways based on how much you're making from the company or how much the company is actually making.
And then he also mentioned that it looks like he has an investment LLC. So he has a checkbook LLC and needs a new computer for his checkbook LLC. Can he buy it with those solo K funds?
That's a little bit of a gray area. In my personal opinion, I would probably say no, because that's not only what you're going to be using it for. It's probably going to be used for other things, and there's no way of actually proving that. So it depends on how the IRS views it. Obviously, you need certain equipment for your business, but to be on a safe side, I would say that a lot of the things that you're going to buy, that you're going to use on a daily basis, even if it's not for your 401k, should be used with personal funds.
Mm-hmm. And that's definitely the situation if it's for yourself. But if Cordy had an employee that he needed a computer for, would that be permissible?
It depends. That would probably be okay, but at that point, it would probably be the company itself buying that instead of the 401k associated with the company.
That makes sense. Joseph asked, when I lend to myself in an LLC for real estate, can it be invested in real estate for personal use?
When they do a 401k loan?
Does not specify. Joseph.
If it's a 401k personal loan, you can use it for anything. You can go ahead and put it in your personal business and you can grow your business that way. You can go and buy a boat, whatever you want to do. It's a personal loan, just like anywhere else. If you are talking about 401k funds, qualified funds, you are not allowed to use it for your personal business.
I was about to do the bop, bop, bop. For those of you that joined us last time, it has stuck, and
Just
my coworkers do not. My coworkers do not let me live it down. I'm sure some of you saw it in the email. That was a nice little joke there, but you're going to hear the bop, bop, bops a couple more times.
It's gonna happen, I think.
Let's see. Mark is asking, from the prior webinar, it was mentioned that Horizon offers silver certificates in general, not Horizon specifically. I've heard concerns that silver certificates are not always backed by silver. Is that true?
I
don't know, actually. That's something we can look into. I'm not familiar with that type of investment, though, but if you want to shoot an email to operations, we can definitely look into it. Off the top of my head, I would say that that's probably something that would be available, since that doesn't sound disqualified unless you're purchasing it from a disqualified person. But I cannot say 100% that I am familiar with that type of investment.
Perfect. Let's see. Isabella's asking, she has two questions. I'm trying to locate, oh, there we go, the two questions. So what are the exceptions to withdraw Roth IRA without penalty fees? So that's question number one. Cary.
I'm sorry, one more time.
Isabella wants to know what the exceptions are to withdraw Roth IRA funds without paying penalty fees.
So in a Roth IRA, you have to be of normal distribution age, so 59 and a half after that age, and you have to have had a Roth account open for 5 years. Does not necessarily have to be with us. It can be, and it can be split. So if you have a Roth open at another plan or custodian for 3 years and move it over to us for 2, if you have it open for 5 and you're over 59 and a half, you are avoiding penalties on that. So that's when that kicks in.
Okay, and it looks like part two to her question was if she can use that Roth IRA money and the earnings to buy a house without the penalty. So
You can buy a house, you just cannot live in it. So if you want to make that as an investment, a rental or something, you can buy that and grow your Roth plan. There is an exception to a distribution to buy your first primary residence. That is a rare occasion that you can take that out before you're 59 and a half, but it has to be your very first primary residence to do that. But other than that, you would have to follow the guidelines of regular IRA distributions for Roths at, over 59 and a half and of 5 years total on the account.
Christina's asking, with a solo K account and the associated checkbook control bank account, if I invest in passive income real estate syndication with the solo K money, how do I use the passive income that comes into the bank account? Meaning, are there restrictions on using that money?
So when you have interest that goes back into that Solo K LLC banking account, that you can go ahead and reinvest it as soon as it goes into the bank account. You can't use it for anything personal. It's still qualified funds. So you want to go ahead and keep reinvesting it, but you don't have to wait. As soon as it comes back, you get interest payments, you can go ahead and use it for another investment at the time that you get it. So as long as you don't use it personally, you can go ahead and reinvest it as often as you'd like.
Yep. And Christina, to that point, so since you are getting this interest and these earnings recurring from your existing investments, you don't have to report any of that information to us here at Horizon. You only have to do that once a year, which is coming up here at the end of the year in December, from December through the beginning of March, I believe, or end of March, Cary? End of March, right? For FMV,
then, yes.
your fair market valuation would be due. So it's once a year that you need to provide us with the value of your account. So if your Solo K LLC is invested into, passive income real estate and you're getting returns on that, that's perfectly fine. The money can stay with your LLC, but then that one time a year that's coming up, when you file that fair market valuation for your LLC, you'll want to include all of that information, any investments you're holding, any cash that you have in that bank account, to be able to have an accurate reporting of your account before tax filing season, so that your account can be reported properly to the IRS. Let's see, Cordy, it looks like some of your question might have gotten answered already, but we'll cover it again. It looks like you asked about where are the options for investing. So we have our investment corner. We said that a little bit quick, but it's available on our website, horizontrust.com. Claudia has the link in the chat along with the password, which is opportunity with a capital O. And again, you guys can play this back on the live stream that's on YouTube when you have a chance if you miss it. Scott wants to know what the process is for funding the checking account associated with his Solo K account. So presumably it's through an LLC, so it would be completely.
I think he's talking about, or he's asking about an investment LLC.
Mhm.
So the way that it works is you would go ahead and set up the LLC. Then you're going to go to the bank of your choice. You're going to take an operating agreement, your articles of incorporation, and an EIN letter from the IRS, and that will let you get the banking account. Once you have the banking account, you come to us and you do what we call a direction of investment form. And that direction of investment form, it's an internal form for us that lets us know that you are directing your funds from your IRA or 401k into an investment LLC. We'll go ahead and ask you the wire information and also the same supporting documentation. So the operating agreement, the articles, and the EIN letter. And then we'll go ahead and send out the funds. We'll do a 2-factor verification. It's a verbal verification and a text verification. And then we'll go ahead and send a wire out to the bank of your choice. And that's how you fund your investment LLC.
Yep. And Judith kind of has a question that's a little bit similar, Claudia. So she's like, how do I add to the Roth IRA? Can I use it as an ACH account if buying a property or tax liens? So those are two different questions. So to add money to the Roth IRA, you can either contribute money. We have our ACH contribution form available on our website, which you'll complete the information, provide us with your bank information, and then we're able to pull the funds directly from your bank account and mark that as a contribution to your Roth IRA. Or you can move money over from another custodian to Horizon Trust. However, once the money is here, you don't actually have the direct access to that money yourself. So to try to buy a property or tax liens, like Claudia mentioned, you would have to do that direction of investment form and get that situated. If you're trying to do a tax lien, that's usually a much quicker process. It's usually a credit card or something on a website. So for something like that, Claudia, would you recommend that maybe a checkbook LLC would be a benefiting factor there?
Yeah, because tax liens, you have to do instant transactions. And one of the benefits of having an investment LLC is instant transactions. When you do the direction of investment, we do have a 2 to 3 day business processing, which is the fastest in the industry, honestly. But if you need it that day, or if you needed to make that transaction, within 24 hours, we recommend you have an investment LLC. And that way you have a debit card in the name of the LLC, you have a checkbook in the name of the LLC. So you can go ahead and make transactions as you need them. So if you need fast and quick, it would be the investment LLC.
Absolutely. And Judith, if you don't have an investment LLC and you want to learn more information, go ahead and schedule a call with our team. One of our representatives can definitely give you more information. We can walk you through the process of what that looks like and then be able to help you set up one, particularly for your Roth account, because they are set up a little bit different than if one was being set up under your own name. So we have companies that we work with that are familiar with how to set up an LLC for a self-directed account. So that way your LLC can remain compliant. So just go ahead and book a call with our team. We'll be able to help you. And if you want, actually, let me drop a quick link into the chat. It'll be all the way down at the bottom for everyone that's seeing it.
Yeah, one thing about the investment LLCs is that they have to have a specialized operating agreement. So you can't just go to any entity formation company and ask for an IRA LLC. Most don't know what that means. It has to have special clauses and provisions that are specific to IRAs and things that you can't do within an IRA for us to accept them, for us to be like, oh yeah, this is an investment that we can take. So that's why we chose, because we were having a lot of people that were coming to us and be like, I wanted an LLC, and they weren't really understanding who to go to. So now we can go ahead and set those up. So we have companies that will go ahead and call you, set up the LLC for you, and then communicate with us and let us know that it's ready for you to start investing.
Yeah, great point, Claudia. We have Dorothy that I was able to locate her question. It looks like it's a little bit split between the chats. So she asked, what, if anything, changes with what I can do with the assets that are in my solo 401k when I turn 59 and a half? So she has assets already in her account. She's not 59 and a half just yet. So is there anything that she can do with those assets after? And then the second part to her question was that she owns a 5-year note in the 401k that matures after achieving that age. So she's wondering if she can start taking that interest that's earned on that.
Yeah, absolutely. So to answer your first question, there's not much that changes according to the actual plan itself. The only thing that's changing is that you can take distributions without penalty. The assets aren't going to change. The details on your notes shouldn't change. They're still going to be intact, and they should be making payments still. And should still keep that maturity date. After you turn of that age, you can take out distributions. You know, you in a traditional plan, you would pay taxes, but without the penalty. And you can take interest if you're getting paid monthly. You can take that monthly interest out each month without any problems. So that's what we have people that do that. We have people who have investments. They're over 59 and a half. They want that passive income on a monthly basis, and they have a recurring distribution set up with us. We send whatever we get in to them on a monthly basis.
Absolutely. We have, let's see, Heidi asking if she takes a personal loan. Let's see, I take a personal loan and make interest payments. Can we structure that interest any way we want? For instance, can it just be quarterly, simple interest only payments?
So
Cary,
is this again going back? Is this a personal loan from a 401k or
personal loan, personal
loan?
401k loan? Yeah.
So the interest is usually it is the prime Wall Street interest rate +2. That is very high right now. We do not require that. They cannot be on a high level of low or high though. So anything below maybe 2 or 3 we can't accept, or maybe above 10% we can't accept. But we can't advise on what you should do. A lot of people like to have it higher so that they get a better return. This is their retirement plan that they're paying back on. And some people want it low just to keep the payments low and want to have a good loan out and pay the bare minimum. So it just depends. But the only other question is you can structure it for a different payment schedule. It can be monthly and it can be quarterly. It can't be any different than that, though. You have to pay at least quarterly according to the IRS. Anything after that is it could be a defaulted loan, and we run into trouble there on that. So
Perfect. Let's see. Oh, some of these questions are starting to double down. Listen, everyone, I'm still getting used to the chat, so we'll figure it out. Alice is asking, can you use your self-directed IRA to borrow for an investment property utilizing a DSCR loan?
DSCR. Well, if I haven't heard of it, then I'm not sure if you can. Most of the time in the plan, it has to be non-recourse. You hear us say that a lot. I'm not familiar with the whatever that acronym was. I apologize. So what you have to know is that you can't have anything else guaranteed. You can't have a personal guarantee on the loan. You can't have your credit used for the loan. It has to be secured by the property only. And then that's all that can be obtained if the loan defaults. So that's kind of the basic thing you have to remember for loans within a plan that you want to obtain.
So quick little Google search said
Okay.
DSCR is debt service coverage ratio. So it's just a metric that lenders use to determine your ability to repay the loan.
So the non-recourse lenders, which are sometimes private institutions, they do kind of use that. I think because of the security of the property is the only thing that they are able to obtain if there's a default on the loan. A lot of times the interest rate can be higher and the down payment can be more. That's pretty standard in those type of loans, but I don't think they use that kind of ratio. I think they just kind of depends on the value of the plan, how much you're putting down, and how much is left over after you put a down payment on. They can decide if qualify for that loan.
Yep, absolutely. Alice is coming in with all the questions, folks. All right,
Bring him, Alice.
Let's go. She wants to know if she can. What happened?
She told us what DSCR is too.
Yeah,
she did.
So she wants to know. She's like, can you JV with another person using their SDIRA to purchase an investment property? If so, do the funds go directly to title company or to your LLC bank account for then you to disperse the funds? So the answer, Alice,
the answer is absolutely yes, you can. A lot of people do it. The only thing you can't do is JV with a disqualified party. So your mom, your dad, your grandmother, anybody in the linear heritage, you cannot do. what you would do, you can use a self-directed IRA LLC and just put the funds in there. You can do based on percentage. So if I had 50,000 and Alex had 50,000 and Cary had 50,000, we could do a 3-member LLC of all of our IRAs, put it into one LLC, and then we can go ahead and buy the property from there. Or you can do a DOI for each of our IRAs, and then we would go ahead and send the money over to the investment company. So it's a personal preference on how you would like to do it. Anything to add, Cary?
No, like you said, it
Pretty-
just depends on how you want to structure it. If you want the LLC control, and then the disbursements, would come back to us for any dividends or returns, depending on how you set that up.
Cordy was asking, and I think I might have said he in the previous question, because I know Cordy's been asking some questions too, and apparently Cordy's a female, so my apologies, Cordy. But Cordy, I think
I get that all the time.
The question was phrased. Oh, that's right. What's up, Cary? So I believe the question was phrased a little bit differently when it was initially asked. So what she wants to know is there a limited amount that I can use my Solo K LLC bank account for an investment? And technically the answer is no. You can, your LLC is maxed out at whatever your retirement funds are maxed out. So if you have $1 million, you can put $1 million in there. If you have 100,000, then it's 100,000. Is that?
And you can use it all to invest, right?
Mm-hmm.
Yeah, it's not like a Solo K personal loan where you can only take half out. If you have the qualified funds available, you can use the total amount to invest. It just depends on if you want to spread that out between multiple investments or kind of do one big one, depending on how much you have in your plan. But there's no limit as to how much you can actually use for investing.
Yeah. Let's see.
We have Heather who's asking about an IRA LLC. Do I need a self-directed IRA LLC in order to invest in real estate with my self-directed IRA? And if so, how do I set one up? So we did go over this. You don't necessarily need it, but if you wanted instant transactions and you wanted access to the funds right away, then you would set up an LLC in the name of the IRA. And the LLC would be owned by the IRA and you would be the manager. And we do help you get that set up. So you can always contact your representative here at Horizon, or you can, I think Alex put, he put in the chat how to get hold of us. So
I can drop it again. It's just a text number. Oh, you got it. There you go.
I'm fast.
You are. You're on it. Yeah, but that was a great question, Heather. And then let's see. Sherry wants to invest in some apartments. I'm going to be using primarily her money that is inherited and won't be taxed to take out. I don't think I should put my money in the Solo K just to fund the investment, especially if I plan on using the money to get upfront as income. Does that make sense? Oh, that was from an earlier question that did not make sense as I read it. Did you catch that?
Read it. I'm using primarily my money that is inherited and I won't be taxed to take it out. I don't think I should put my money in the Solo K. Just to fund the investment. So I'm wondering if it's an inherited IRA or if it's this money that she inherited. So, yeah. Okay.
So she doesn't want to like contribute to a plan if she already has it available, and she wouldn't be taxed if she took it out of the plan after that. So there's sometimes when you have the plan, it can grow tax-free until you take it out. So that's why they're available. So if you contribute to a plan and it grows, over a certain amount of time, that's tax-free right there. So you only get taxed when you take distributions out. It can be little by little going on when you get older. So that's kind of the advantage of having a qualified plan. Obviously, we recommend you talk to a financial advisor if they think you should keep the money because it might already be taxed. They don't want you to get it taxed twice. That's definitely something on your personal finances.
Mm-hmm. Let's see here. Oh, I lost my chat. There it is. So my mother has an LLC and is using her self-directed IRA with my LLC and we can't do business since we are related. That's correct, Alice. So you want to stay away from the linear line, so up and down. So your parents, your grandparents, your children, your grandchildren, and then that does extend also to your spouse and in-laws. Is that correct, Cary?
Right.
Yeah.
But I mean, in this situation, it depends on what you do. You don't want to commingle the money and like lend each other money. But if your mother and your LLCs buy a property, a rental at 50% apiece, that's fine. You can do that. The LLC would own 50%. Your rental income would be split 50%. Bills and taxes would be split payment. You can do that. That's fine. You're not making a transaction with the other LLC. All of it is going towards the property and then back from the property.
Qualified.
Perfect. She's like, that's what I meant. Perfect. Let's see. Todd's asking, if I bought an investment property with HELOC, but I'm not going to be using the property personally, can I use my solo K funds to pay back the HELOC?
So it depends on how you got the HELOC. I believe you have to put down your personal credit and guarantees on a HELOC. I'm not 100% on that, but which would not be available inside a plan. So if you obtain that loan in that way, then that would have to remain outside of the plan. So you wouldn't be able to pay it back with your solo K funds.
Would he be able to do a solo K loan?
Like a personal loan?
Personal loan.
Yeah, if you have the 401k and you have funds available, you can take a personal loan of half or up to 50,000 to help pay that back, but you'll be paying back at the same time your 401k. So that's also a different personal situation that you would have to think about.
Yeah, and for any of these situations, folks, if the question or like is phrased maybe differently, or we don't translate it the way you intended the question to be, feel free to give us a call, schedule a call with our team, or just give us a call. We are still in business hours right now, so we do have our representatives that are still answering the phones. But don't leave us yet. Stick around. We're not done yet. But give us a call, definitely.
Telling everyone to leave.
And we'll be able to answer your specific questions a little bit more clearly. We can ask you more information, and we can do the back and forth on the phone call, which is a little bit more difficult to hear in the room with the chat. But we're definitely able to assist you to the best of our abilities. Moving on to the next question that Timothy here has, he saying that when using a private lender, does Horizon Trust have any forms for me to structure the loan repayments to the lender? So for that, no, we have our own documentation for you to process your investments or anything that you need to do a transaction within Horizon Trust. But for specific documentation like promissory notes or anything like that, agreements, you're going to have to do your own due diligence, unfortunately. And that's one of the things where Horizon Trust does take that passive role in its custodianship. So you do have to do your due diligence, work with an attorney or someone who understands how to set up that information, so that way your account can be protected. Michelle asked a great question, Cary. Are there different rules for an inherited IRA versus a regular IRA?
There are a few differences. So an inherited IRA, you are not eligible to make contributions to it. They want you to kind of start taking that out as much as you can instead of adding more to it. You have the same investment availability, same type of rules for investing, but inherited IRAs also did make a big change in 2020 with the CARES Act. You are required to have that distributed out within 10 years of receiving it, and you are expected to take RMDs every year of those 10 years. So you can take out an equal amount for 10 years. You can take out the minimum amount for 9 years and take out the remainder in 10. But it does have to be fully distributed by the 10th year. So that is a little different. A few years ago that changed.
Yeah, they're definitely unique situations, and we do our best to stay informed with everything that's changing. And we try to provide you all with any information that it could be relevant to your specific circumstances or situations here at Horizon Trust. With the coming year, the IRS is doing contribution limit increases to kind of deal with inflation and all of that. So they haven't officially announced what those increases are going to be. But once that information is available, we are monitoring that and we'll prepare information and be able to get that out to you so that you are informed and are able to maximize your contribution limits for a given year and try to help lower your tax burden. Paul is asking, he's wants to use his SDIRA to invest into an LLC. He's like, is it disallowed if I'm 50% or more owner of the LLC or 10% owner?
So this is kind of
Compliant.
getting into a little bit of a legal advice. It's hard to say at that point. When you are involved with a company that you want to lend money to from your plan, there's a lot of variables that can be taken into account by the IRS that would make that disqualified, including voter rights, control of money, and things like that. So it is really something that we want you to get legal advice on, or a CPA. It is technically not disqualified because you're a minority share at 50%, at 50, you have to be 49 or 10%. Technically, on paper, that is not disqualified. But again, there's a lot of other variables the IRS looks at depending on your role in the company.
Yeah, and on our direction of investment forms, we do have a little questionnaire that's on the bottom of one of the pages that does ask what your participation in a company is. So go ahead and read that information carefully and fill it out accordingly, because that will help pretty much answer your question for your particular situation, because the situation does vary to vary, kind of like how Cary was saying that. So those questionnaires are there to kind of help both you and us understand if the investment is going to be a disqualified investment. Timothy wants to buy a property from his son. Can he do that?
Sure. You can't do it from your IRA. He said, "Can I buy a property from my son?"
I
Go
was
for it,
like,
Tim.
wait.
Yeah, I was like, I was about to say all together now. No, but I was like, what?
No, you cannot buy it from your son within your plan. Sorry, that is not allowed.
All right. Sorry,
The
Timothy.
linear heritage, the linear heritage.
Yeah.
Well, let's keep that family tree in mind, folks,
Yeah.
when you're making your investments. Heather is asking, so this is a very common question that we do get with self-directed accounts. Do you give up the right to claim depreciation when you use a self-directed to purchase a property?
The answer is yes.
Yeah. If it's in your plan, then you don't own the property. Your IRA or 401k owns the property. So any depreciation on that cannot be claimed by you as an individual.
And then following question is, can solo K money be used for real estate training or memberships? So we'll tackle that in two parts: the qualified funds versus a loan. So qualified funds, Cary, it's a no, correct?
Right. And I get this question a lot because people are like, well, I'm using it because I want to do this for my 401k, but you're gaining personally on this, your knowledge, and you could use it in other situations as well, outside of the plan. So you should not be using the qualified money to be purchasing memberships or training for that. But like as Alex said, there's always that loan available for the solo K, whether it's the total amount or even just a small portion. If you want to do a membership training, you just have to pay it back. But yeah, once it's out on that personal loan, you can do with it whatever you want as long as you're paying it back.
Yeah,
We do get that question a lot.
yeah, so that was a very good question from Todd. And for the 401k loans, folks, with a loan, you're able to do whatever you want with that money. And we don't report that you took the loan out to the IRS per se. Like, they're aware of the transaction, but not counted as a distribution. It doesn't affect you as an early distribution or anything like that. The only time when a solo 1K gets reported as a distribution and when you can face tax penalties is if you do default on the loan. So that's what Cary was mentioning earlier. You have to make a payment to the loan at least once a quarter. Always want to stick with your amortization schedule, whether it's monthly or quarterly, but a payment must be made at least once a quarter to avoid defaulting on the loan. And if you're having trouble with your loan, always contact us. We're here to help you out, so we can definitely work with you to try and get your loan situated.
Michelle wants the information to get in touch with us. Claudia, you got that on your fingertips?
I'll put it on there.
right on her page.
Judith said, so a brother, sister, niece, or nephew is not direct lineage. Yes, it's not. This is going like that.
Brother and sister's
Lineage is
fine.
This way. Yeah.
Yeah.
I don't know why the IRS lets me.
Don't ask. Yeah.
Yeah,
heard
lend
that.
to my
Everyone's like,
brother,
why?
which I would never do, but they don't want me to lend to my mother.
I try not to fathom what the IRS is thinking.
I
It's not fun.
feel like sometimes you have to think like them, don't you, Cary?
Yeah, I try, but it's not possible.
Welcome back, Alice. If I have an old IRA to roll over to Horizon Trust, will I have to pay taxes if I roll it over into a Roth IRA, or should I just roll it over to a regular ST IRA and avoid tax penalties?
That's a great question. So you could do either or. You can, if you
both.
can put a regular IRA into a regular IRA here, you don't pay any taxes. It's just a direct, it's a direct rollover into another company. But if you wanted to pay the taxes and do a conversion, then we can help you with that as well. What you would do is you would put the IRA into an IRA here, and then we would do a conversion. We would open a Roth account and do a conversion, and you would pay taxes at that point for the Roth IRA. We do that a lot. A lot of people didn't know about Roth IRAs or weren't aware of it, and then we go ahead and set up that kind of structure for them. So it's something that we do a lot here.
Right. You can do both. You can roll it over to the traditional IRA and do a partial conversion if you don't want to pay taxes on the full amount now.
Mm-hmm.
Yeah. And then just remember, once the money is in a Roth IRA, that money is starting to grow tax-free. So when it comes out on the other side, when you are ready to distribute it from the account, you've already paid the taxes on that money. So your unique circumstances, your unique tax strategy, when you're working with your CPA, they might be able to help you identify what that amount is. Maybe moving 20,000 here, 20,000 there, or a full 100,000, whatever the situation is. You're gonna want to work with your CPA, find out what that money is. It'll help lower your tax burden and then help you on the other end once that money does come out and get distributed to you. So that way you're not paying taxes at a later time by taking advantage of that Roth conversion. Michelle asked, how would you get taxed if you've already taken it out? I think this was referring to when we were talking about the full 401k loans on defaulting on the loan. So if they have already taken the money out, Cary, and they do default on the loan, what does that look like for them?
So basically that's a distribution on paper. We've already sent the money out, so there's not any money exchange at that time. A defaulted loan, we would send what we call an assignment of interest, changing title from the loan that we hold to you personally, and then the value of the loan gets distributed in our system, and the value of the loan gets generated on a 1099-R and sent to the IRS. So you owe taxes on the actual value that we're showing. So that's how that gets taxed.
And then they would work with their tax professional during tax season to kind of rectify that, correct?
Right. The 1099 would just be claimed as income for their personal income.
And would it just be the principal that get distributed?
Right. The principal at the time. We wouldn't add, the interest owed for the remainder. That's, not something we do.
So it's whatever the balance is recorded in our system, which the clients have access to via the online portal. That's the amount that we're going to distribute.
Mm-hmm.
Perfect. Okay. Alice, I see you're asking a question pertaining to documentation. So if you draft up a contract, we look it over specifically to make sure that the loan there's certain key points. Our investments transactions team will look over to make sure that the document has certain terms that benefit your retirement account, because the point of a self-directed account is to still benefit and grow your retirement. So your investments have to always benefit your retirement account. We are unfortunately unable to fully review a document and let you know, hey, this is a bad investment or this is whatever. You have to speak with a professional on that, whether it be a lawyer or CPA or whatever the case is, financial advisor. Because that's just something that we at Horizon Trust are not licensed to. It's not necessarily that we don't want to help you, it's that we're not licensed to do it. So we are unable to. Let's see. And then if I buy, Alex is asking if I buy precious metals with his IRA, is it okay to hold the metals
Metals.
myself? I cannot say the word, and I'm not going to try.
The metal, is that what it
Bullion?
says? I don't
No,
know what you're
bullion.
doing.
Yeah.
Bullion.
Oh, the bullion?
Yeah, I was not going to attempt to say that word.
On the spot.
I know. I gotta
Um,
these questions.
Yeah, unfortunately, you cannot. I've heard that question a lot as well, especially within an LLC. People who have control of the funds, they want to buy precious metals and store them wherever they want to store them. Some people have said their house. I don't really get that part, but it does need to be at a storage facility. Most of the time, there's a precious metal storage company that you can use. I have seen safety deposit boxes within an LLC as long as the account is in the name of the LLC. So wherever you're storing it, it does have to be in the name of either the plan. We always work, if it's directly from us, we work with a specific company called Delaware Depository for the most part. In an LLC, it is up to you, but you cannot just hold on to them yourself. That would be disqualified.
Let's see. Mark said, "You're assuming the IRS actually thinks."
I saw that.
Any comment? Had to
They
read
give
it.
us the rules, we just.
I just have
we
to
just make them
regurgitate
fun.
them.
Adriana asked, how soon can you take out another loan once the previous loan has been paid? So we'll assume it's a 401k loan.
Right.
Because that's been a big topic today. So what would that look like, Cary?
So there's a couple options there. If you just paid off a loan and you want to take out the maximum amount that you have to wait 12 months actually. A lot of people who either have one currently or are, the one they have right now is getting lower. They can take out a second loan at a discounted rate or discounted value to equal the total amount that they can take out. So if the cut and dry answer is if you want to take out the full amount, you have to wait 12 months from the final payout, but there's intermediate things that you can do during the current loan that you can take out a second loan.
Clear as mud. Kidding, that one made a little more sense. Let's see. Oh, Timothy's clarifying that. Can I purchase the property from my son's LLC? So that would still be no.
Right. Sorry.
Sorry,
If
Tim.
your son owns the LLC, that still would be considered disqualified.
No. I saw another one in here. Let's see, if you have 50K in your self-directed Roth, what is the max that you can take out to purchase a rental property? And is there a time frame that needs to be paid back? So if you're purchasing a rental property as an investment property through your Roth IRA, then there is no time when that needs to be paid back. And you're able to take out the full amount that's in your account. Here at Horizon Trust, we allow you to take every last cent that you have from your account. So the only thing that we do require, if you are going to do that, is to have a credit card on file. And that's just for if any fees come up, or usually around the time of your annual or for your anniversary or anything like that. In other instances, if you didn't want to have a credit card on file, then you would just need to maintain a $500 minimum balance in the account in order to take the amount. So if you want to take the full 50K and that's what your account holds, then you can take the full 50K by just adding a credit card to your client record here at Horizon. We send you a link and it uploads automatically into the system. So then you're all situated after that.
Yeah, and I hope we're not confusing people on the limit thing because of this, the 401k, the loan, the personal loan. That's the only thing that has its limits. If you want to use money for investing elsewhere, you can use all of your money that you have available.
Great point. Yeah. Let's see. And then how do you get a 401k loan and what can you get it to use for. So Judith, you can take a 401k loan for whatever you want. It's a personal loan, same as if you were to go to a bank and ask for a loan from them. The only difference is here, instead of paying the bank, you're paying yourself, you're paying your retirement account. And the way you go about actually taking that loan is by completing one of our documents. It's actually a loan application. It's available on our website, horizontrust.com, up at our form section. And then we do have a 401k section that has the specific loan documentation. Using that document will help you, we'll walk you through the process. You'll complete all of the information that's required. There are two separate forms. One is if you're married and one is if you're single. And that's just because one does require your spouse's signature if you are married, because you are taking money from the retirement account. And once we have that form, you would need to create an amortization schedule, which is basically your repayment terms. If you don't know how to do that, you can reach out to us and we're more than happy to assist you in creating that documentation, because that is something that we are actually able to assist. So there isn't many things that we can help create for you, but an amortization schedule for your 401k loan, we can. And then one of the questions that came in is, are you answering questions from YouTube? And unfortunately, Paul, we are not. We haven't been monitoring YouTube because we're getting so many questions on Zoom. So if you are watching us on YouTube, I know there's a slight delay, but this is why you should always register for the actual Zoom invite. We make the YouTube one available just because some of you can't find the link sometimes, or it's just the link doesn't come into your inbox for whatever reason. So we still want you to be able to access and gain all this information. So that's where the YouTube comes into play. And then the beauty of it is that because it is live streamed to YouTube directly, the second that we end this recording, it's automatically saved in YouTube and you can go back and watch it again. So rather than hearing from us 2 days later saying, hey, the recording is now available, you can watch it in the next 5 minutes after we're done. Which unfortunately here, it's more like 3 minutes because it is going to be 4 o'clock. So we are at the end of our Q&A for today. So I guess one of the quick things, Claudia, let's see here. I had a question prepared that I wanted to ask you. Well, ask both of you, really.
Oh, yeah.
So it was just one of the little things, just a way to wrap up and to end. It's two things. So first question for both of you is, what exciting thing do you have going on right now in your life? And then the second thing is, how did you service a client today?
Cary, you go first.
I have a 6-year-old and a 3-year-old. So the most exciting thing going on in my life is just being there for them. There's not really much major things, at least, that happen on a daily basis for me, but that's what I look forward to going home to. And then helping a client today, I worked with our outbound team to work with one of our clients who, I guess he missed one of our emails and there was a delay on his investment, but we got it taken care of and everyone turned out happy. So seemed nice.
Nice. Claudia?
I actually had a client that needed to do a conversion from an IRA to a 401k so that he can do a personal loan. It's funny because that's all we talked about today. So I helped him set up the sponsor company with our entity formation company same day, and then we are going to go ahead and do the 401k application so that he can go ahead and take out that loan in the next couple of days. So he was super excited, and he's going to go ahead and get that done. Something exciting in my life. What has been happening? I go for runs every night. That has been exciting. I take my dogs out for a 2 to 3 mile run, and it has been really, really fun to see them kind of coordinate. One's really little, one's really big, so coordination's a little awkward, but once they get the rhythm, it's fun.
Nice.
He said exciting, not exhausting.
That's exciting for Claudia. It's her spending time with her dogs. Awesome. All right. Well, thank you too for jumping on with me. For those of you still watching, we are going to be doing these twice a month. It's going to be on the 2nd and 4th Thursday of every month. So feel free to join us. We're going to be making this a recurring webinar event. So you won't need to register every time. You can just register once and then it'll kind of remind you each time. But we'll get those details sent out soon. So that way you guys can be able to join us for the next event, because one of the questions that we were having is, you guys throw these webinars on so last minute. It's like, yes, we're sorry. So we want to have more consistency for you. So our Q&A webinar will be on the second and fourth Thursday of every month. And then Greg still does his webinars, which those might be a little bit more inconsistent. We'll try to always keep you informed as soon as we have any information, but we'll always let you guys know as soon as we have that information. Thank you everyone for joining. Claudia, Cary, thank you again for attending.